So I understand that there's been a lot of movement with oil and gas on the markets so far.
Yes, there has. There's been renewed interest in the oil and gas sector, especially in, as everyone expects, the deregulation of the downstream sector to happen before the end of the year. On the Nigerian Stock Exchange, most of the stocks listed are downstream players like African Petroleum and Oando. So there's been renewed interest in that sector.
And as we were talking just in the recap there's also been a lot of action with the banks at this particular time.
Yes, everyone's expecting merger and acquisition activity, and based on that, and also on there's a raft of results that have been coming out in the last 2 weeks. GT Bank, Zenith Bank and UBA have come out with results showing the results of the industry-wide audits and the loan provisions they've had to book. Both Zenith and GT have shown a decrease in profits, but their loan provisions have been within market estimates, but they've also been able to still show a profit. Only UBA showed a loss, but from what the CFOs said, they expect this quarter to show a profit.
Now, earlier in the news, we were talking about Zenith Bank being one of only 14 lenders who were given the all clear in this big clean-up by the central bank. What are the ramifications have there been? I mean, it's several weeks now since that took place. What are the ramifications now in the banking sector?
What we're seeing right now in the banking sector with results of the audit is that at least everyone knows who the CBN have passed. And those banks, those institutions are now gearing themselves up for the common year end, which is going to happen on December 31st, when all the banks in the country are supposed to have the same year end and publish the same results so they can be analysed across the sector. What we're also seeing is that a lot of investors are taking positions in some of these mid-tier banks, such as Diamond Bank, GT Bank, in anticipation of movements in merger and acquisition activity maybe next year. So what we're saying is really the market's trying to decide who are going to be winners and losers in the merger and acquisition activity for next year.
And one thing that struck me, I mean, surely with only a few banks who've been given the all clear, isn't it a case that supply is not meeting the demand for credit?
At the moment, there is banks are reluctant to give out credit because they're still trying to sort out their books. A lot of them are trying to put the risk management processes in place to ensure that the kind of loan loss provisions they've had to book don't happen in the future. So what a lot of them are doing is that they're going back through their processes, and there is a credit shortage in the economy. CBN has taken note of that, and they've tried to stimulate the economy by advising the government. And I think one of the issues they did was they produced $2 billion, which they put into all three tiers of government, trying to stimulate the economy and try and ease the credit crunch. But I don't think we're going to see an easing of that credit crunch until probably Q1 next year, when the results of the common year end start coming out.
But what is the feeling on the ground at Olukayode? I mean, basically, is it feeling like it's a new dawn for Nigerian banks?
We've had a lot of new dawns in the Nigerian banking sector. There have been a lot of attempted cleanups of the banking sector, which have lasted for 2 or 3 years. And unfortunately, what we've seen is that the sector has gone back to the way it usually operates. Now, what we're hoping for now is that the new helmsman CBN, these reforms will be sustained, and a new culture of risk management and corporate governance will be instilled in the banking sector. So there is some hope that this will be a sustained effort, but also there are some critics who say, well, we've seen this all before. Is it going to be sustainable?
And last but not least, the great cement debate. Now, the President Yar'Adua has put on a 10% import duty onto imported cement to try to get the local market going. How is that going down in Lagos?
There have been most people applaud the gesture to encourage local cement production, but the issue for local cement production has always been power. It is not economical to do large-scale cement production if you have to generate your own power and pay your own diesel. So until the power problem is solved, it's going to be very hard for them to be competitive. On the other hand, to encourage the local cement manufacturers to expand, as Lafarge is doing in Ogun State and Dangote Cement is doing as well, you have to put in incentives, and this is an incentive that will help in promoting local production. But it remains to be seen. For the real fill-up to the cement market, you really need to sort out the power problem.